start out by saying that yes, it was an uncomfortable start to the year. Anxiety about a slowdown in China, beyond what was already anticipated, was heightened by the near 5% drop in the Dow Jones during the first week of 2016. Despite weekly market jitters and some premature doom and gloom predictions, we need to recognize that the underlying fundamentals of the U.S. economy remain sound. In terms of the economic data, the most recent shows that labor markets remain healthy, consumer spending is trending up, and auto sales remain extremely robust, so mostly positive. By most metrics, 2015 was a healthy year for the U.S. office sector, coming in at just under 82 million square feet. Net absorption in 2015 was the strongest of the cycle so far, and it was just a few thousand square feet away from surpassing the peak level of demand in the last cycle. The national vacancy rate is now at a cyclical low of 13.9%, so that's 60 basis points lower than its level in 2014. And rents are pushing upwards in most markets. In fact, out of the 87 U.S. metros tracked by Cushman & Wakefield in the fourth quarter, 70 reported office rent growth, and we observed another 12 markets that were in double digits. Risks have certainly shifted to the downside. In addition to China, emerging markets continue to struggle due to the plunge in commodity prices and oil, which has created a capital flight out of these markets. It is alarming that a growing portion of the global economy is now flirting with recession. But what we also know from recent history is that when conditions deteriorate globally, capital gravitates to the U.S. even more aggressively as it remains the safest of the safe havens. Although it's uncomfortable now, the U.S. economy and the office sector will weather this turbulence in all probability, as it has several times over the course of the last 6 years, and the U.S. expansion will continue.